Thank you, Sarah. David, welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. Front and center at this hour, the three key themes for your money heading into 2026. The investment committee is standing by with their playbooks. Joining me for this hour, we have Jim Lebenthal, Jason Snipe, and Josh Brown. Before we get the discussion started, a quick check on the markets. You can see we're in the red across the board. Kind of a muted day right now. The Dow down more than 100 points. The S&P and the NASDAQ down fractionally. The Russell down about 1/4%. But of course, you have the Fed minutes coming up later today, and they have the potential to change the momentum in this market, at least the potential. Jim Lebenthal, I'm going to start there with you. Coming up later today, we're getting the minutes. Now, we already know some details here. We know we have a divided Fed, 3 dissents, 2 said just pause, 1 person said 50 basis point cut. We know they're trying to weigh the impact of inflation and weakness in the labor market. Is there anything in this minutes report coming up later today that can change your view on either the market today or the Fed in 2026?
I kind of doubt it. You know, Frank, we were here yesterday, and I remember talking to you about signal versus noise, and I feel like the minutes are going to be a lot of noise because of all of that dissension, frankly, on both sides, and because the things that caused that dissension have not cleared up in the last few weeks, and they're not going to clear up probably for a couple of months yet. Those items being things like how much is the labor market weakening, and where is inflation and the effect on tariffs. I do think that the Fed is going to be wise to pause here. For how long we need to see, but certainly the next meeting, I don't think they should be going. Let's get another couple months worth of inflation data and jobs data. By the way, we talked about this yesterday too, but I continue to think this is very important. When the Supreme Court rules on the legality of the tariffs as they're currently enacted, that's going to put a lot of things into an uproar. That may change the inflation numbers if tariffs are at least temporarily ruled illegal. The president will, of course, use different statutes. But things are going to be up in the air. And I think with the amount of easing that the Fed has done over the last year and a half, they have the luxury now of waiting, and they should take that luxury.
All right, Jason Snipe, when we're waiting for these Fed minutes to come out in the build up to it, is there anything you're anticipating, anything you want to look at when it comes to these Fed minutes, or anything about the Fed that you think this could at least potentially clarify?
I don't think so, Frank. I echo a lot of Jim's sentiments, and Frank, you already said it at the top, right? 3 dissents. I mean, the Fed's never been more divided, well, at least in the last 6 years, let me say that. For me, I think the focus for the Fed clearly is labor. That is the concern for them. It'd be interesting to see if there's some commentary about inflation, right? I know that it's obviously been a dual mandate for years, but they have definitely veered off into the Labor Department. We know labor is solved, so I don't expect anything earth-shattering in terms of the minutes. But my focus is kind of going into 2026. I think directionally we're still heading lower. There will not be a cut in January, but I think that with the Fed share shift happening in May, looking into the back half of the year, I think that's the focus for me in terms of where policy goes.
All right, Josh, same question for you. Anything in these minutes that has potential to change your view of the market right now, the Fed in 2026, 2 cuts priced in as of right now?
The Fed is the least important chess piece on the board right now. Out of all of the things that are driving markets globally, not just in the U.S., literally the Fed is the least important. Not because the Fed isn't powerful or because we want to fight the Fed. It's just that you're looking at a 16% chance of a cut. That could go to 0 the next time we get a hotter than expected print on something. It could also double to a 32 or a 40% chance the next time we get something disappointing on the labor front. But the reality is this has just been an incredible year for asset owners around the world. It's so much bigger than just whatever the FOMC is going to do. And the reason why what I'm saying I think is important is because the momentum is probably not going to stop on a dime just because the calendar turns over from December 31st into January. I want you to consider the top 3 performing sectors this year. Communication services stocks are up 34%. Tech up 25, industrials up 20. Not far behind are financials. You just take those 4 sectors, that is a huge chunk of the market. There are, I think, 13 or 14 S&P 500 stocks that have gone up more than 100% this year. But then you look at other asset classes away from the S&P, and you realize that what's happening here is so much bigger. Europe is up 36% year to date. International emerging market stocks up 34%. International developed is up 32. Brazil's up 50%. Canada up 37. That's not the Fed. It's nothing to do with it. In fact, in Japan, they had 2 rate hikes this year, and the stock market broke like a 4-decade high. Gold is up 65%. The commodity index is up 20. The ag is up 7%. Tips are up 7%. Even cash is up. The only thing I could find that's down is Bitcoin. So we're not talking about when's the next 25 basis point cut. What we're really talking about is a wealth creation atmosphere of enormous magnitude. A lot of people have been underweight. They haven't been involved in international, or they've forgotten how to buy things that aren't S&P 500. And I think that should really be investors' focus for this coming year. What do I own? Do I own enough of it? Is it meaningfully diversified? And does it have an opportunity to outperform in an environment where the S&P is selling at 22 times earnings?
All right, Josh, we're going to talk a lot more about that broadening coming up just a bit in the show, but you're saying the Fed is the least important piece on the chessboard. I'm going to go to Jim. You've been chomping at the bit to kind of get at this. I think the question that Steve left us with is, what's the economy doing right now? That is the question. If you look at the Fed GDP now, we're at 3% growth for Q4. Obviously, the Q3 first read was much better than expected. So do you believe we have a strong economy and an economy that can help drive earnings in the S&P and hit those earnings estimates that everybody seems to be pinning their hopes on for next year? A lot of noise about the fact there were no bearish strategists on Wall Street. Everybody's bullish for next year.
Yeah, well, you got to come up with something out of left field to become bearish. I mean, you got to come up with a scenario where you see a recession forming. And if you're seeing a recession forming, it's because of an unknown. You're not looking at things like bank balance sheets and saying, oh, hey, Houston, there's a problem that's about to blow up. So I don't like to do that sort of thing of roll the dice and just see, hey, maybe I'll be right if I call for a recession. And I think nobody else does either, which is why nobody's bearish. To your question about the economy, though, I think we're in a strange and unusual economy, and many of us have remarked on this, where you do have growth. The growth figures are legit, but they are very much focused on artificial intelligence infrastructure build-out. We know that housing and manufacturing outside of AI is in the doldrums, and we do have worries about the labor market, which generally you don't see when you're putting up quarterly GDP numbers of 4.3%, 3.0%. So I think that's a conundrum. What I was chomping at the bit, to use your expression, and I'd like to think I'm a little bit more reserved than that, but maybe not always. What I might have been chomping on the bit at is that what we haven't talked about with regards to the Fed is there is a stealth easing going on right now, which is that they are expanding the balance sheet once again. And I am strongly of the belief that is stimulative, and it's something that doesn't get enough press. It also gives another reason why the Fed may say, hey, listen, we're in no hurry. We're doing plenty to support the economy.
All right. You know what? A lot of people think maybe get too much press, the Mag 7. Josh, I'm going to come over to you. What's the state of the AI trade, the Mag 7 trade right now? What does it mean that only 2 members of the Mag 7 are outperforming the S&P this year, especially going into a new year? What does that momentum or lack thereof mean for this trade?
I think this represents the triumph of index investing, passive investing, and diversified portfolios. They warned us repeatedly, day in, day out, just you wait. Once this whole AI thing collapses, or once the tech bubble bursts, or once Apple stumbles, or Meta stumbles, or Microsoft, you're in big trouble. The whole market's going to get taken down. It was the opposite. What actually happened was some of the biggest stocks on earth had horrible years relative to the rest of the market. And as their market cap bled out, like from a wounded animal, it found other places to go. It went into banks. It went into healthcare stocks. It went into gold miners. It went all over the place. And the market is finishing this year plus 18%. And just so everyone's aware, we have had dozens and dozens of record high closes. And that is with some of the largest stocks in pretty substantial drawdowns. So for every Palantir and Alphabet and Broadcom, which have had incredible performance this year, there have been tons of stocks with massive market caps that have been listless to negative, like your Salesforces, like your Metas, et cetera, et cetera. And this is the beauty of this year for investors. It's unlike 2023. You didn't have to be overweight AI. It helped, but you didn't have to be. There was money to be made all over the place, including overseas, as I pointed out earlier. And to me, That is the big takeaway from dispersion amongst the Mag 7 this year.
Okay, but that applies to 2025. I don't know if you've seen this. Dan Ives out with his 5 AI plays for 2026. Microsoft, Apple, which you own, Josh, Tesla, Palantir, and CrowdStrike. You also own CrowdStrike. Your take on this list, is there one of these that you especially like out of this 5 right here of Dan Ives' picks?
I have been a long-term shareholder in Apple and spent the first half of this year and probably last year very critical of Apple's stumbles to do something in AI. It may just turn out that loudmouths like myself and other Apple shareholders who thought we were, quote, falling behind, have the story backwards. What Apple actually has done, which is sort of fascinating, is it has won by not playing. Any Star Trek fans remember the Kobayashi Maru. The only way Captain Kirk was able to win the game was by not playing at all. They did not announce record-setting CapEx numbers quarter after quarter after quarter on the AI theme. Instead, what they've done is they've sat back, they've watched everyone else come and go, launch products, gain users, et cetera, and what they'll probably end up doing is walking past all of the mistakes, copying all of the successes, and rolling out what is arguably going to be the most important version of AI because it's the one that's going to be in all of our pockets. I understand OpenAI wants to launch a couple of devices. I wish you luck. I understand Microsoft's got, their own hardware. Okay, great. When Apple is finished, in my view, with their product in AI that's actually usable beyond just an improved Siri, I think it'll be the one that has the most traction because it's billions of installed devices and it's a user base that never leaves almost no matter what.
All right. Kobayashi Maru, that was a deep pull, Josh. I like that one. I'm a big Star Trek fan myself.
I came to get down today, Frank.
I can see. Jason Snipe, I want to come over to you. Microsoft's on that name as well. You're a shareholder of Microsoft. The real thesis here, when you're talking, at least Dan Ives' thesis, is about the Azure growth being underestimated. Do you believe that's the case? Because we saw pretty tremendous growth when it came to Google Cloud, Oracle Cloud's out there. There's a lot of clouds out there, Neo Clouds and things like that. Is it simply the cloud business, did you think, that's going to give Microsoft an advantage coming up to next year? Or are there some other aspects of the business? Or are you not as bullish on Microsoft as Dan Ives is?
I think that's what's tied to the multiple, obviously. I think Azure growth has been phenomenal amongst the rest of the players, right? But I think to Josh's point, as I look at the Mag 7 performance and what's happened this year, they obviously, I think this has been healthy for the market. They have not traded as a monolith. And if you look at the top 10 names that have performed from a performance perspective in the S&P, none of those names are on that list. You're talking about Western Digital, Robinhood, Seagate, Micron, Newmont, right? So these are different names. To Josh's points, a lot of the flows have went to other places, and I think that's positive. But you cannot abandon the growth for these. And again, if we look at the earnings, 30% earnings growth in the tech sector, right? 15% earnings growth going into next year. So these are names you continue to need to put into the stable. Understand, I think the second derivative plays can play out well, like the Palantirs, like Dan is talking about. Definitely power has obviously been a theme, but I think it's going to be important to kind of spread the wealth. I think that story continues to roar going into 2026.
Right. You know what name wasn't on this list? Alphabet. Jim, you're an Alphabet shareholder. I'm going to use a Star Trek reference. Alphabet, a lot like the Borg. It seems like resistance is futile. This company continues to find a way, whether it's cloud, TPUs, whatever the case may be. Gemini, another example. We keep saying, oh, Alphabet's behind. They just catch up.
YouTube, Waymo.
Waymo's another great example. What's your take on that name being left off this list? By the way, if you look at Q4, Alphabet's up almost 30%. It's having a great Q4, more than 29% right now.
No, it's up over 100% from those lows back in May. And I don't know why Dan left it off. I mean, he's a stellar analyst, just to continue with the astronomical things here. It may just have been the price. It may have been the return. This is no longer as cheap as it was when it was trading in the high teens not that long ago. So maybe he's looking at it and saying, hey, it's fairly priced. We can do that from time to time. We can look at a great company like Alphabet and say, hey, it's fairly priced. Now, I'm not going to sell it, but I don't think you're going to have a 100% gain from here over the next 6 months months or even 12 months, it might be closer to the market return. So maybe that's why he left it off. But I'm not selling it here. I do, I had a little coughing fit, and I've just got to fess up that, Josh, I think you may have caused a little coughing fit. That Kobayashi Maru, you're talking to a Class A geek here. I think you mashed up Star Trek and
I think
War
we're
Games.
all aware.
You mashed up War Games with Star Trek, right? You did that.
I may have. I may have.
I think we better move on. This is not a sci-fi show. It is certainly an investing show. I want to go point out one other name that was left off the Ives list. That was Meta. And kind of opposite of Apple, they kept boosting their CapEx and spending. When it get to Meta, also acquiring an AI agent startup, Manus, in a bid to prove its AI capabilities beyond ads. Our Mackenzie Sagalos has all the details. Mac.
Hey, Frank. So Meta reportedly paying more than $2 billion for Manus, a startup founded in China but now based in Singapore. It builds AI agents that businesses can use to offload work like basic web builds, competitive research, and customer analysis. The startup growing its revenue 20% plus month over month and giving Meta a real subscription line that it can point to as investors press for a payoff on its AI spending. Now, those shares, while higher today on the news, are still lagging Alphabet and the broader tech sector year to date. So far this year, CEO Mark Zuckerberg has spent roughly $30 billion on hiring, according to D.A. Davidson's Gil Loria. And the push to prove ROI only intensified after Meta spent almost half of that in June to bring in Scale AI founder Alexander Wang to lead the effort. Investors are still waiting to see what exactly all that spending has delivered. One VC source put it bluntly: Meta is buying what it couldn't build fast enough. One of the few consumer AI apps up for sale with a view to beef up its business offerings and plug it into Meta's distribution across roughly 3 billion users. Frank?
All right. Mackenzie Sagalos, the very latest on Meta. Meta shares up just about 1%. Mac, thank you very much. Good to see you. All right, we were kind of hitting on some of the names that were left off, Alphabet and Meta, but Dan Ives did touch on cybersecurity. One name that wasn't on the list, but I want to touch on with you, Jason, Palo Alto Networks. I'm just looking at the chart.
Yeah.
I'm looking at the chart. They had a big acquisition. They bought another cybersecurity company. Platformization is a big theme.
Yep.
Yet this company's stock seems to continue to lag. What do you see going on here? Because it's certainly considered at least one of the blue chip players in the cyberspace.
Yeah, so I mean, there's two large. Well, I would say the CyberArk acquisition, which is a significant one. That was a $25 billion acquisition into the identity game, which I think will be accretive to them longer term. And the second one is obviously this Chronosphere deal, which was a $3 billion deal. So I think that's been what's kind of held the stock back a little bit. The new platform strategy has been in play for some time now. So I think we're starting to see some results, but I think it's been the acquisition moves that they've made that the market is trying to digest right now. But I think going into 2026, I think you'll start to see some spring up in that side. All right,
Josh, I want to come over to you about CrowdStrike. That was on the Ives list. Stock's having a great performance this year. Your view of it going into next year, and do you think everything in the cyberspace is priced in? I mean, I remember when the SEC added that you had to have people on the board with cyber expertise and you had to report things. It seemed like at least people thought that would be a big tailwind for cyber stocks, and that hasn't really seemed to be a factor. Do you think that's a factor going forward?
I do. Look, CrowdStrike in the AI era over the last 3 years is up an average annual return of 66%. That's like insanity. Even versus other AI stocks. Microsoft's done 27 average annual returns in the AI era, Oracle 35. A lot of people think Oracle had been like the big winner, but cyber has done twice as well, specifically CrowdStrike. And that is because what AI represents is an exponential increase in workloads, and every workload requires security. Therefore, more AI means more cybersecurity. It's almost a tautology. There's no way around it. And so that's been a tailwind for these stocks. But all right, stare at this chart real quick. All right, now switch it back to Palo Alto. I want people to see the similarity. 1, 2, 3, great. Same chart, guys. When did these stocks peak? They peaked in November, right as the Oracle blow up started, and all of a sudden there was this sort of mass doubt about the AI infrastructure build out and the CapEx spend for next year, et cetera, and some of the financing. So these stocks are in their own world, the cyber stocks, but like most technology stocks, they are at directly reliant on there being a tailwind for the AI theme. And once that was called into doubt, around Thanksgiving, these stocks weren't immune. That being said, I think it's a buying opportunity for both. I agree with Snipe on Palo Alto, and I just happen to prefer CrowdStrike, but I think they can both work together into the end of the decade.
All right, we're going to also talk about the broadening. Josh, you brought it up earlier. Jim, I'm going to come over to you. If you look at Q4, we've seen the broadening, the equal weights outperforming the market cap weighted S&P. Healthcare is taking leadership, up over 11%. Some other areas also, financials up about 2.5%. It's kind of just tied neck and neck with tech and then communication services there too. Do you believe in this broadening? How would you play this broadening going into the new year? Also with the thought that we may start to see the impact of the tariffs when it comes to onshoring, companies moving things back to the U.S. I talked to a lot of transport CEOs. They believe about Q2 of next year is where we're really going to start to see that.
Well, I do believe in the broadening, and I just believe that all of the effects that have so far been concentrated in artificial intelligence stock earnings, Frank, are going to start to flow through to the industrials, to the material stocks, even energy, which we're seeing a pickup in. Now, healthcare is obviously not a direct beneficiary of that, but it's moving for its own reasons. And I think, there does have to be a public service announcement here that over the last 3 years, there have been plenty of head fakes in which the RSP, the equal weight S&P 500, has outperformed for a short period of time the overall market cap weighted index. And by no means am I saying or recommending that somebody should go sell all their tech stocks and put it into financials, industrials, et cetera. But I do have a healthy allocation to it. And I guess the most insightful thing that I can say is 2023, for someone like me, was a terrible time in the markets. Why? I held a lot of good companies that were not technology, but the only things that worked in 2023 were in technology. I can tell you 2025 has been much better for somebody like me, who has seen, as you pointed out, financials doing well, drug stocks doing well, et cetera, et cetera. And I do believe that that momentum will continue. I think there are some sleeper sectors like energy that we need to start paying attention to. If it's rallying with crude oil below $60, imagine what happens if crude oil goes above $60, gets to the rather tepid price of 65, tepid in historical standards. That can happen, and I think we should be positioned for it.
Jason, I want to come over to you. Looking at Q4 in particular, the laggards are utilities and consumer staples. We've seen a broadening without those two sectors participating. Do you see those accelerating, kind of catching a bid coming up next year, even though they're technically defensive, but utilities seem to be part of the AI trade, at least in the early part of the year?
Yeah, I think definitely I'd be more bullish on the utility sector. Obviously, that's kind of the power-related names that I think could get some steam kind of going into 2026. I think staples is always interesting because they're pricey. A lot of those names are pricey with not a whole lot of organic growth. So it's tough for me to kind of see that as a runway. But to Jimmy's point on healthcare, I think healthcare is an interesting one, especially going into a midterm election year. Healthcare typically is not the best sector to be running. Go ahead. You're going to say.
Well, I'm just going to say, I think it can do well this year.
Because I do too.
I'm sorry if I'm taking the words out of your mouth, but we already have drug pricing from the government, right?
You got it.
That happened 3 years ago with the IRA bill, and that's always the threat during a midterm election year is that the government will come in. Somebody will run on the platform of I'm going to have Medicare and Medicaid negotiate drug pricing.
100%.
That's already done.
100%.
Sorry, Jason. Take it.
And then what I would say, IBB is obviously a sector that a subsector I've been talking a lot about on the show, and for me, the main focus is those patent cliffs that are falling and the rebuilding on these pipelines, and I think that's why biotech can continue to work.
All right, look at the IBB pulling back about 1 1/3% right now. All right, coming up next, Josh Brown's best stocks in the market. He's revisiting a top travel stock that's been breaking out. We're going to show you that name coming up. Halftime's back in just 2 minutes. All right, welcome back to Halftime on this penultimate day of 2025. We have Josh Brown's best stocks in the market. Josh, take it away.
So we, on best stocks in the market list, we've spent a lot of this year talking about travel. It's been the strongest sector of consumer discretionary, and by a lot. We've seen restaurant stocks stumble. We've seen a lot of other areas of consumer spending be called into question. But the one thing that never slowed down, even for a minute, almost at every segment, every level, has been travel. And as a result, on this show, we've been spotlighting best stocks like Marriott, like Expedia, like we did the airlines, we did Delta, we did United. Today, I want to talk about Hilton. So Hilton is the same business model as Marriott. People think they're in the hotel business. They're not. They're in the points business. So they own approximately none of their hotels. I think they own maybe 40, 50 hotels. The entire chain is owned by developers and franchisees. And what Hilton does really well is run this asset light sort of like marketing / loyalty points business. And they're making tons of money. And you can see in this chart, the stock's been a winner all year. That little blip down was Liberation Day, and that problem was fixed relatively quickly. And it has spent most of this year in an uptrend. The stock had incredible earnings, just like Marriott, in November. Next earnings reports are not until February. And what we're going to hear in February is that these companies have just experienced record-breaking traffic volumes, RevPAR, any metric that you would value these stocks on for this fourth quarter. And I think they'll be guiding higher for next year. And I think that's what these charts are telling us. So in the column, we've got specific levels. We've got risk management levels as well. We never go into a name without knowing where we're wrong and where we want to be stopped out. But I do believe that these stocks will remain in uptrends. And there's more than just Hilton. This just happened to have been the one that caught our eye technically. And Frank, we'll be keeping an eye on this group as we get into next year.
All right, I'm looking at one name on this list. It's Delta. Jim, you're an owner in this one. Your view on the travel trade more broadly, we were just talking about weakness in the labor market and some concerns there, and also inflation. Does the travel trade continue in 2026 with these concerns?
I think it does. I think it does. You know, if I look at Delta as just emblematic, and Josh is obviously looking at Hilton, but if I look at Delta, what I see is everything's going right. You got low fuel prices, you've got labor contracts in place, you've got very high capacity utilization, and that capacity utilization is at the front of the plane where they make the most money. They're paying down a lot of debt. So if you're going to get bearish on Delta or the travel industry in general, Frank, you got to go back to what I said earlier about you've got to see a recession. And if you're going to call for a recession, it's kind of like you're licking your finger in the wind and saying, yeah, I think the wind is going to change here and blow the other way. There's just no evidence of it happening.
Yeah, just anecdotal. If you try to get one of those Comfort Plus seats, like they're sold out immediately.
Well, they're kind of overblown anyway. They really are overblown.
Well, I'm pretty tall, so I need a little leg room, Jim.
We've got to move you a little further up in the cabin, my friend. I'll work on that with you.
Thank you.
Okay.
By the way, Josh, the best stocks in the market in the travel trade: Marriott, Expedia, Delta, and United. With that, and welcome back to the halftime report. Meet the 2026 dogs of the Dow. Barron's picked out the 10 highest yielding stocks in the Dow, which are on track to notch their best year since all the way back in 2019. Jason, I'm going to start with you. These are two companies in areas we were just talking about: consumer staples and healthcare, United Health and P&G.
Yeah. So obviously UNH has been a laggard all year. It's down 35%. I think, at this point, it's like, what is not in the stock, right? Hemsley is a known commodity. He's obviously ran the company. He's responsible for this turnaround. Utilization rates are way up. Medical costs, that's a trend across the industry. So, and they are shrinking Medicare Advantage membership, which I think will be accretive to their margins. So I think this is a story, again, going into 2026 that will fare better. Procter & Gamble down 14 for the year. October U.S. package sales were down, which wasn't great. I mean, 50% of their business is done internationally. I think the consumer was kind of cautious with the Fed shutdown and other things. So, again, that multiple has come down to 1 to 4% organic sales rate is tough with an expensive stock. But I think this could fare better as the consumer holds up in next year.
Josh, you got a few of your best stocks in the market on this list, talking Chevron, Amgen, Home Depot, Johnson & Johnson. You look kind of mixed performance when it comes to the price action on the stock, but obviously this is about the dividend.
Yeah, so I don't play these types of games typically where it's like, all right, what are the highest yielding worst performers? And let me use that as my, as the pond that I want to fish in. If you guys pay attention to what I do here on the show, everyone is aware I'm looking for winners, not losers. That being said, I do think that there are some opportunistic situations on this list. I guess the one that I'm most intrigued by, I'm not investing currently, is Nike. I think it's its fifth down year in a row, if that's even possible, or maybe it's fourth, but either way, that's never happened in the company's entire history since coming public in the early 80s, and I would be really surprised if it persists another year. But once again, this is not what I do. I'm not looking for the bottom of the barrel. I'm looking for winning stocks, and these are not that.
Just in all fairness, Josh, not all of them are losers. I mean, Johnson & Johnson up over 40% year to date. So within some of your best stocks in the market, there are a couple that are winners, but you're just saying you're not focused on dividends. You're looking for price appreciation.
I guess, yeah, I think, I guess the premise of the reason we should pay attention to these is because they're dogs of the Dow. That's the kind of thing that I don't see value in that as an investor.
All right, Jim, coming over to you. Do any of this, investment thesis seem attractive to you? Any of these names seem attractive to you?
No, I'm going to take Josh's ambivalence at least one step further and say be very, very careful here. Normally, when I talk to dividend investors, they tend to be retirees or people who are looking at long-term holdings here. And quite often with these stocks, what you see is you get the dividend and nothing else. Now, the poster child for that is, of course, Verizon on this list, which over 10 years, actually almost 20 years, the share price has gone nowhere. All you've gotten is the dividend. And it has woefully underperformed the S&P 500. You would be much, much better just buying a diversified ETF than buying something like Verizon. And that, to a certain extent, applies to a lot of stocks on this list, which are troubled. You know, I'm sorry, Jason, United Health Group. Maybe it turns around. Maybe things get better. Home Depot. Maybe the housing sector improves. But why take that chance? These stocks are trading at high dividend yields for reasons. And they're not good reasons. All
right, we're going to leave the conversation there. By the way, Verizon up about 1.75% year to date. Coming up next, this is this year's worst performing sector. The question is it ready for a big bounce back in 2026? We'll debate the committee's strategy. Coming up next. A REIT that you own, Invitation Homes. Just your take on real estate coming up in the new year.
Yeah, Invitation Homes is effectively rental single-family homes. It's had a disappointing year this year. The whole real estate sector has been out of favor, and with good reason. I don't see that turning around anytime soon. These are total return plays, though. A lot of the return that's going to come from these types of REITs is going to be a combination of what the share price does, along with the dividend income. And of course, when I own these things, I am usually setting things up so that I am reinvesting that distribution income, which I have been doing on Invitation Homes. So the lower price is not fun, but the dividend distribution goes higher, and we continue to buy.
All right, Snipe, quick word. You got D.R. Horton, pure play home builder. Rates they're kind of in a place where people don't really want to move, especially if you have a mortgage under 4%. Your view on real estate coming up next year in this name?
Yeah, so I mean, D.R. Horton is roughly positive for the year. It's up around 4%. I think for me, listen, their cohort is a first-time home buyer. That's the group that they focus on. You know, buyer incentives have definitely hurt margins. I think that's the story here. You know, affordability, as Josh mentions, I mean, is just a major problem with these types of names. And until we can kind of see mortgage rates come down meaningfully, we're probably not going to see some real movement there.
All right, D.R. Horton pulling back about 0.5% right now. Coming up, Mike Santoli markets, but you got a lot of excitement coming up later today. You have your mystery broker.
Yes, in a couple hours right here. So this is a source of mine for 16 years. And here's one of the things that will be accomplished by having him here as guest. One, he's going to give a pretty interesting, provocative outlook, I think, longer term for markets. Two, it will prove once and for all that the mystery broker, who has won a bit of a following over the years, is not Josh Brown. Because that was one of the big guesses over the years, is also not Mike Wilson or Jim Cramer or David Tepper. So stay tuned.
Stay tuned. Okay. Are you sure it's not Josh Brown?
I'm sure. I wonder if Josh is sure. But,
Can you imagine me doing anything quietly or mysteriously?
That's what I said. That's been my answer. I was like, the publicity-shy Josh Brown does not want me to name him. Yeah.
All right. The mystery indoors until 3 p.m. We're going to find out who the mystery broker is. I'm sure it's going to be a great interview, a great conversation. Mike Santoli, we are looking forward to you keeping us in suspense, man. We want to know. We had some bets out here. I can't see on TV what the guesses were, but I'm excited. 3 p.m. mystery broker revealed. All right, final trades coming up on halftime. And welcome back to halftime. We are back with final trades. Josh Brown, you're up first.
I mentioned CrowdStrike earlier in the show. I think the stock wins in 2026.
Jason Snipe.
Amazon, AWS was up 20% reacceleration. I like this stock here.
The farmer, you get the last word.
Pacific Gas and Electric. This is a utility, Frank, that was absolutely slaughtered earlier this year because people thought it was responsible for the LA fires. It was not. Now, there are some financial repercussions nonetheless, but clearly they're not as dire as was feared. And the stock has a lot of momentum. You can see it over the last 6 months. And I think this is where we should be going into the new year.
You know, interesting. We were talking about utilities being one of the laggards in Q4 and the attractiveness of utilities going into the new year. You're picking the utility space.
There you go.
All right. That's going to do it for us right here on Halftime.
Hello and welcome to Blue Cloud Trading. I'm George. We are going to take a look at some of the stocks today, folks, how they're doing. The market currently, it is 10:15 a.m. on Wednesday, December 31st. And we're going to look at the markets right now. You can see how they're dropping a little bit. We've got the Dow down 0.27%. NASDAQ is down 0.2. S&P 500 down 0.21. And the Russell is down 0.40 this morning so far. We've got about 64.6% of stocks declining versus 31.4 advancing. And yeah, I mean, if we look at the heat map here, let's take a quick look at that heat map. NVIDIA is up, Berkshire is up, AMD and Intel is up. Micron's down 2.32%. The majority of the stocks are just slightly down. There's not a whole lot going on. Basically, I'll tell you what's going on. Essentially, we've got the volume today is very illiquid market. U.S. stocks dip mostly in quiet year-end trade as indices hover near the record highs and banks tap Fed for liquidity. So you can see here the U.S. indices edge lower in a thin holiday-shortened final session of 2025. The S&P 500 and other benchmarks remain up roughly 17% year-to-date, near all-time highs. Initial jobless claims fall to 199,000. Beating the expectations and signaling labor market strength. Banks draw a record $26 billion from the New York Fed's standing repo facility to address year-end liquidity needs. Precious metals slip to close out a strong annual performance. And trading volume remains light with a few new catalysts as the year concludes. What we're going to cover are the stocks that they talked about, the majority of them, not all of them. They talked about 23 stocks and ETFs. You can see the list right here. We're going to look at the technicals on those. We're going to look at the index ETFs like the SPY, QQQ, Dow, Russell. We're going to also look at the Mag 7 stocks like Tesla, Apple, Meta, Microsoft, Amazon, and we've got some 6 requests from our members. That list right there. So let's go ahead and get started, and I'm going to give you guys a quick, brief overview. Some of you are coming here for the very first time, and you're probably wondering what's this chart that I've got up here. That's called the Ichimoku indicator. And what you're looking at is a Japanese indicator that was basically published in the late 1960s, but it's a really clear and simple way of looking at trend in the market, whether it's the S&P 500 in this case, or it could be, for example, a specific stock. We're going to look, and I'm going to explain to you how it works. You've got the Japanese candlesticks here. Now that's price, okay? And we want price to be above all these lines here, like the Tenkan-sen, which is the conversion line. That's the midpoint of the last 9 periods. That's that green line right there. We want price to be above the red line, which is the Kijun-sen. All right, it's the 26 period, midpoint of the last 26 periods. Highs and lows divided by 2. That's how it's projected out there. You got Senkou-span A. Now that's part of the cloud, the Ichimoku cloud. You get that Senkou-span A line, that light colored blue line, which is part of the cloud, by taking the midpoint of these 2 moving averages and projecting it 26 periods into the future. And then you get the Senkou-span B, the purple line, which is the midpoint of the last 52 periods, okay? Instead of projecting it under the candle, it's projected 26 periods into the future. We want that Senkou-span A to be above Senkou-span B. That's a bullish cloud. And then there's one final line, and that's the Chikou-span or lagging line. That's the closing price or current price in this case, projected 26 periods into the past. And we want to see where that line is in relation to the candle 26 periods ago. If it's above it, that's a bullish signal. Back here, you can see it was we had the Chikou-span or lagging line under price. That was not a good situation, and you can see what happened here with price. It was dropping. All right. So we always want price to be above the cloud. That's how you know you're in a strong trend. You can see back here in 2022 when price entered the cloud, how it dropped, right? And I mean, we can go back as far as if I switch it to a monthly chart, we can take a look, for example, at the 2008 financial crisis. I mean, we'd have to like really zoom in here a little bit. Let me go ahead and zoom in so you can see what that looked like on the monthly chart. Okay, you can see how price got into the Tenkinson, the 9 period. And from that point, from that exact moment on the monthly chart, price had dropped approximately 54.11% in 1.2 years. I'm sure you guys remember 2008. This indicator just helps us get a quick synopsis of what's happening at this moment. Right now, price is above all the moving averages. We're in a bull market. And yeah, the market's down today slightly, but so we'll look at the weekly real quick here. You can see it's still strong, and it's very strong on the daily chart as well, even though it's pulled back a little bit. Price is still holding up above the moving averages in the cloud. So if you see a little blue flag here on the left-hand side, that means that it passes the test of Ichimoku and that it's in a strong uptrend on both the weekly and daily time frame. That's what you're looking for. And so you can have a more, confident trade in the SPY or the Qs or any stock that we talk about. Here's the QQQ ETF, also looking good here on the daily and on the weekly chart. Here's the Dow Jones DIA ETF. If you want to invest in the Dow, this is one way you can do it. Down 0.28%, but as you can see, it's just kind of like hovering. There's not a whole lot of action. There's nothing to be really concerned about at this moment. We're just basically taking a breather. FEZ is the Euro Stocks ETF. Same situation here. There's the weekly. Here's the daily chart. Yeah, it just dropped. It just dropped. Actually, earlier when I looked at this, it was above the Tenkinson. Right now, it just got under, so we'll take away that blue flag. But yeah, I mean, it's the first signal on the daily chart that things are, it could potentially pull back a little bit. But I wouldn't be overly concerned quite yet. You've got the Russell 2000, which has pulled back quite a bit. As I've mentioned in previous videos, was looking the weakest out of the bunch, and you can see it's down 0.44% today. Now, the Russell, though, could potentially bounce here. It's reached the 26 period, and usually when price comes down to that's a level of support, and it is stalling. So just keep that in mind. And then the VIX, it's up slightly, 2.37%. That's the volatility index. All right, let's go to the next segment here. We're going to look at the stocks that they actually talked about. Josh Brown and other guests on the halftime report from yesterday. And we're going to look at those stocks that they talked about. Here's XLC, the communication services sector, looking very bullish. These four are the only 4 ETFs or actually instruments here that actually are up. Everything else does not have a blue flag, and I'll explain, what's weak about each one of those. XLC looks strong on the daily and on the weekly chart. Industrials, XLI, this ETF looks good too. Price is holding up above both moving averages on the weekly and on the daily chart. It's pulled back. It's touching the Tenkinson, and it could potentially by the end of the day. Remember, right now it is currently 10:22 a.m. Eastern time. I'm 5 hours ahead in Tenerife, Spain. But basically, price is stalling right now. So what you want to do is wait to see what happens around 4 o'clock, 3:30, 4 p.m. You'll have a better sense of exactly where the price will be. But right now, we are pulling back. XLK, also pretty strong. You can see here on the daily chart, price is above the cloud, and Chico span is above price, and you get the faster moving average above the slower one. Everything looking good, but it's down 0.34%. And on the weekly chart, there's XLK, the technology. Now, I talked about this. I mentioned how there was a symmetrical triangle here. So just keep that in mind too. Like price, if it breaks through this triangle, if it breaks to the upside of that, okay, if it breaks through that line, expect an expansion to the upside. Okay, that's a very bullish pattern. If it gets under, it could break down and maybe even get down as far down as the cloud itself. We might see a more deeper cut into the in price. XLV is healthcare, looking strong overall. Okay, holding up above that 155.01 level. That's based on this prior high right there. Here's a daily chart. Okay, it's just moving sideways right now. Nothing major here. CrowdStrike, on the other hand, here's a perfect example of how quickly you can assess. Remember, Ichimoku in Japanese, it stands for at a glance. So what we're looking for is to see where price is currently at a glance in relation to the cloud. If price is under, that's bearish, not something I would be touching. Why? Because we don't know exactly when this thing is going to bounce around. We need to see a momentum change. We need to see the sentiment change, right? You can see here where price got under the cloud, for example. We didn't see that until price got back above the cloud right there, right? Came back, found support, and then continued on, right? Right now, we're getting the opposite. And with CrowdStrike on the daily chart, I'm also seeing kind of like a complex looking head and shoulders pattern. So there's the head, for example, there's the shoulder, there's the other shoulder, and there's the neckline. And you can see how we're holding right above that neckline right now. So we've got the 200-day moving average right there too for a level of support. So we'll see what happens with CrowdStrike. I wouldn't be jumping into this quite yet though, obviously. Delta Airlines is pulling back a little bit. Overall, pretty healthy as it's still above the cloud. There's the weekly chart too, okay? But these last few weeks, you can see it's pulling back now. And so it might correct here because I am noticing it stalling at that level. Notice how it's finding a little support right there. Today it's up 0.20%. One of the few stocks that's actually up. DHI, DR Horton Inc., looking good. Above the 200, but currently it is inside the cloud, okay? So it was under, it came back above. Again, the rules of Ichimoku is you don't add or enter a new position until price breaks through that cloud. So you'd hold off on that one. Hilton, Worldwide Holdings, lodging. This one's pulled back a little bit. Now we're getting a nice little spinning top, bullish spinning top candle. And by the end of the day today, if price can get back above that Tengensen, that would be a nice little buy signal. But right now we're not there. We're down 0.17%. IBB is also under the moving averages. That's the biotech index, but still holding up above the prior low here. Okay. And if we look, there's a slight little decline there. Do you see how we got a lower high right there from the prior one? Just slight, but it is a lower high nonetheless. INVH. Which is Invitation Homes Inc., real estate sector, REIT. Well, it's still in a decline, and it's been in a decline for a while now. Josh Brown's final trade back on March 13th. Here's the monthly chart. It is still under the cloud on the monthly. On the weekly chart, it's under the cloud. We've had a little bit of bullishness here these last three weeks, but that's not enough to change the direction. And here on the daily chart, we still have a series of lower highs and lower lows. We're in a downward channel. Okay, you can see that right there. I would stay out of that one. Johnson & Johnson is currently under the moving averages. Another negative thing is the fact the Tengensen, the green line there, crossed under the red line. That's also negative. So I would not be adding here either, even though it's up 0.01. MAGS, M-A-G-S, Roundhill Magnificent 7. That one is stalling at the Kijinsen. Not the time to jump in quite yet. If we look at the weekly chart, still very bullish overall. Nike on the weekly chart, under the cloud, up 1.99% today, based on the, let's see, there was some info on that I just briefly missed here. Nike rises following a CEO transition and a $1 million insider share purchase. Okay. I don't know if that's enough reason to really reward Nike, but you never know. I mean, it is up 2.01% today. PAMW, which is Palo Alto Networks, is still under the cloud on the daily. I'd stay out of that one. PCG, Pacific Gas and Electric, inside the cloud. Another rule of Ichimoku, you don't add new positions when price is inside the cloud. You wait for it to break. It needs to break through. The cloud itself is still bearish. You've got the Senkou Span A. The light colored blue line is under the purple Senkou Span B. That's also bearish. But that 200-day moving average, where it was declining, is now starting to flatten out, which is a good sign. So there is potential here, but we still are technically, all right, if you look here, we're in a downward channel still, okay? So I'd stay out of that for now. What about Procter & Gamble? That's also in a decline. Look at that. Here's a perfect example of why you shouldn't be buying stocks when price is under the cloud, because you don't know when this channel is going to end until it breaks through, okay? And sometimes it will break through and it's still not enough force to make it make it move. But at least you can get out early and take a smaller loss, right? If you added here, for example, and you got out here, you're taking a much smaller loss on that trade versus holding it. Because if you hypothetically held it from that buy signal, you're down 15.4%. Palantir, PLTR, ticker symbol is under the Tengen-sen, but holding up above the cloud. All right. Not a buy signal though. RSP is under the Tengen-sen today, down 0.30%. That's the S&P 500 equal weight ETF. There's the daily. Here's the weekly chart. Still very strong overall. UNH on the weekly is under the cloud, and on the daily, you've got Verizon, which is inside the cloud. I would hold off on that too. XLE is under the Kijun-sen, the 26 period, so, and re-entering the cloud today. It's down 0.60%. Here's what it looks like on a 5-minute chart. It's pulling back. Might find some support there at the 200. XLSI, this one here is currently under the cloud. There's the candle. It's like a flat little candle. That's the Consumer Staples Select Sector Spider Premium. I would not be buying this one. There's like almost zero, is that zero volume? You see that right there? That's interesting. So not a whole lot of volume there. Utilities, XLU is under the cloud and in a downward channel. Okay, there's the downward channel that I'm talking about. So stay out of that one. All right. Let's go to the next one, list here. We've got the some of the Mag 7s. Now, I don't cover all the stocks that were talked about in the show because some of those might be in the Blue Cloud portfolio. If you guys are interested in finding out a little bit more about the exclusive member-only videos that I post, you may want to consider the following. This is your last day, folks. It's December 31st. It's December 31st, and you can lock in the price for the memberships. Let me show you what those are. You've got 3 different tiers: Blue Cloud Supporter, Blue Cloud Trader. Now the Blue Cloud Supporter, I'm going to leave that at the same price, but Blue Cloud Trader will be going up, okay? And it will be going up to $50 per month, and Blue Cloud Legend will be going up to $75 a month. So consider joining today. This is your last opportunity. If you do that and you maintain the membership active, you keep that price throughout all of 2026. If you deactivate your membership, you'd only be able to come back at the new price. So just giving you guys all a heads up about that. So consider that. Now, what do you get under this? Blue Cloud Supporter, you're helping the channel. You can request a stock, one stock be analyzed on the show. Blue Cloud Trader, what do you get under this level of membership? This is where you get access to the exclusive member-only videos that I post each weekend, and I go over my entire portfolio. Let me show you what those look like. This is the, these are all the videos. And you can go back and access all the videos too, which is great. So you can see how my performance has been over, over a year now. I've been posting these. So there's lots of videos. Let's see, where else? And then finally, if we go to the next level, which is Blue Cloud Legend. All right, this is more, you're getting more stuff. You're getting daily updates on the trades that I'm placing. Daily trade updates. You'll also get access to some day trading videos. Okay, and you can request the 3 stocks or ETFs be analyzed. The daily trade updates, I'll show you guys, come up under the posts. Once you become a member, there'll be a new tab, and it will look like this. It will say membership, and that's where you'll access those posts. So consider becoming a member. All right. Thanks. And by the way, thank you guys. I hope you all have a wonderful, in case I forget towards the end of this video, I hope you all have a wonderful new year and had a great trading year. And yeah, here's to more trading and, Blue Cloud. My goal is to stay with this. A lot of you, I'm getting a lot of positive feedback, and I appreciate all of you. We're also, by the way, one more thing I want to mention, we're almost at 27,000 subscribers, so help me reach that. We're almost only 200 subscribers away from 27K. All right, okay, cool. And then if you want to check out some more things, here's some more links, 9 more links. If you click on that, you can read a little bit about me, scroll down. All right, there's a whole bunch of links here, including my Twitter page, which I would recommend that you might want to check out. This is what it looks like. And if you scroll down, you clicked on highlights here, you'll see the posts and everything that I put in there. But if you click on highlights and you scroll down further, you get this free candle pattern reference sheet. And then there's also this stock patterns cheat sheet, like the head and shoulders pattern that I just mentioned a few seconds ago. All right, there it is. There's the regular head and shoulders, which is a bearish version. There's the inverse head and shoulders pattern right there. Okay, let's get back. So Tesla, let's look at Tesla real quick. Tesla is up 0.11% today. However, as you can see, it's been pulling back and stalling right at the 26 period. But this is not the right time to jump in because it's still under the 9 period. I'd wait. On the weekly chart, it's still pretty bullish, but as I've mentioned before, I'm kind of concerned about the fact that we reached this old high here, and that goes all the way back to 2024. All right, the week ending December 20th of 2024. Think about that. We're almost at 2026 now, and it reached these levels, okay, for 2 weeks in a row, and now got rejected at that point and dropped. So that is not a good sign necessarily, but it could certainly stall at the Tengen and then recover. But right now is not the time to be jumping in my opinion, because on the daily chart, like I said, it's pulling back. Apple is in between the two moving averages. I'd hold off on that one too. It's above the cloud. That's good. It does look good still. Actually, it's kind of lost a little bit of its luster here on the weekly. I mean, it seems to be holding okay in this range for now, but it's for like 2 weeks now. It's been under the green line, the 9 period. What about Meta? Meta is also under the 26 period, and it's, that's the weekly chart that you're looking at right there. On the daily chart, we're inside the cloud. I'd hold off on Meta. What about Microsoft? Microsoft is under the cloud, so no on Microsoft, although it has been showing, again, some strength recently. We got a higher low here from this one. It looks like it's building another symmetrical triangle pattern right there. You can see that very clearly. And so will it break to the upside? Maybe. And then if it does, okay, expect it to probably break through the cloud, but I would not be jumping in quite yet on that one either. Then you got Amazon, which is under the cloud as well. Okay, I'd hold off. All right, so just wait it out a little bit on Amazon. Here's the weekly chart, still under for multiple weeks now. We're talking about 7 weeks in a row now. We've been kind of just stagnant with Amazon, just in this little box. It's been boxed in, folks. We've got some member requests here. Let's take a look at some of those stocks. Like TE, for example, is the ticker symbol for T1 Energy Inc. Electronics components. Here it is in the weekly chart. Very strong trend overall. I like the bullish cloud right there. It looks good. We did get some reversal candles up here, but overall it's holding its place. Let's look at the daily chart. We got a new buy signal here today with it's up 6.62%. You can see that it pulled back and now it's moving back up again. Will it close above the Tengen? Because yesterday it closed underneath. So if it stays above, this is not a bad spot. The other question you have to ask yourself is this a kind of stock that you want to hold? Because it is a low-priced stock at $6.92. It's going to be very volatile. It moves a lot, obviously. And it's still not a profitable company. 136.57% is the profit margin. Negative is the negative margin there. It's only a $1 billion capitalization, which is relatively small compared to most of the stocks that we generally cover. But everyone has to make their own decisions about their risk tolerance as well. The price of sales is good at 0.88. That's a good price to sales ratio. All right, let's look at Boeing. Boeing is looking pretty good on the daily chart. We've got a bullish cloud. Price is above the moving averages. It's pulling back a little bit, down 0.64%. However, it does not get the blue flag because on the weekly chart, we still have the faster moving average here under the Kijun, 26. So the 9 is under the 26. And it seems to be stalling at that 218.80 level. You can see that 2 days in a row now, 2 weeks in a row, sorry. But like I said, the daily chart looks pretty bullish. Again, another company that's negative profit margins. I'd be you know, there are better opportunities out there with more stocks that have maybe better fundamentals at this point. General Motors down 0.6%. Actually looks, I don't know if it's going to close under, because remember it's only 10:39 a.m. This could turn bullish by the end of the day. I'm just giving you a heads up that it is pulling back now. It looks like this little wick being built up, which means that some buying is happening in these last, I don't know, hour or two. We can look at that on a 5-minute right there. So it pulled back all the way down. Here we are, December 31st. Came down to this level at around 9:40 a.m. And since that point, it's moved up about 0.7%, but it's still under the cloud. So no on GM. LNG is under the cloud. I'd stay out of this one because it is, oh, that's a 5-minute, sorry. On the daily chart, it's in an established downtrend. It does seem to be showing some strength. I don't know if you happen to be holding this position or not, but it is showing some strength where it is a small, tight channel that's moving upwards here for LNG. And here's the weekly chart. You can see it's stalling around this area, but and it's still above the 200. So we might see a reversal here, but I would not be adding any new long positions in this stock. I would probably want to manage this trade at this point, because you can see that it also, coincidentally, if we draw a trend line right there to that low, okay, which is 188.70. Let's go ahead and put that in there. Notice how price has been stalling right there. So it does seem to be finding some potential for bouncing here, but again, no new entries on LNG. Our DDT looks good overall. It is above on the daily chart. I'm sorry, on the weekly chart, it's above the moving averages. The only problem is you'll notice the Tenkan-sen is slightly under the Kijun-sen. That's the one negative there. On the daily chart, it's also under the Tenkan-sen right there too. So hold off on Reddit. I would not be adding it quite yet, you know, but if you are holding the position, this is certainly not a bad place to just, you know, manage it, because it is technically above the cloud. It was under, and it's built, it popped above it here on Monday. Here we are on Tuesday and Wednesday. It is still holding above. So there is potential. The other thing you can look at is the directional movement index here at a setting of 9 that I have. The green line is still above the red line on the daily chart, so I like that too. What about VG, which is Venture Global Inc.? That's pulled back. That's pulled back quite a bit, hasn't it? So you can see here, it got under the candle, I'm sorry, under the cloud itself back on October 7th. And since that point, it dropped 45.49%. That's a big drop. We can go back further. And so this is where the cloud and this indicator comes in handy, because you can see that it never made sense to be buying down here. It never made sense to be buying here, okay, when it was under the cloud or inside the cloud, or here, or even here when price, the Tenkan-sen got under the Kijun-sen. I would not have bought right there, for example, because the green line was under the red line. When was the last time it made sense? It's probably that candle right there. And then it started going against it right away almost. So we're talking about, from that point there, a 57.2% drop. So this is how you can stay out of trouble, essentially. Now on the daily chart, we're showing a little bit of strength here. There is a positive crossover that's taking place with Venture Global. And the oil stocks have done a little better today. So this is up 0.43%. So it is stalling. It's building a little bit of a base right there. Okay. So there's potential for this thing to recover. I don't know if you have a position. Again, I'm just kind of calling it like I see it. Here's a daily, and there's the weekly chart, you know, stalling at the Tenkan-sen. So very volatile, and it's a cheaply priced, you know, $7 is going to move a lot. Okay. And guys, that's going to do it. Appreciate you all for watching. Oh, look at TE, for example. Just in the short period of time that we were just talking, it's up to 8% already. Do you see what I'm talking about? Here's the 5-minute chart. TE1 Energy is still moving up. The one stock with the blue flag is moving up quite a bit. VG is only up 0.43% right now. And you know what I forgot to show you guys also was the groups real quick, which groups are looking today. So one-day performance technology is down the least, only down 0.09%. Real estate is down 0.83% the most. Energy is down 0.7. It's not a very big trading day, obviously. One more thing. Let me show you guys how the market is looking at this particular moment before we leave. Dow is down 0.28, NASDAQ is down 0.25, S&P is down 0.26, and the Russell's down 0.29. So pretty much even. Not a big drop here. And that's going to do it. Thanks for watching. I appreciate all of you guys. Hope you all have a wonderful, happy new year, and I'll catch you in the next video.